bad guys are playing chess while the good guys are playing checkers. They have the first move, and that first move always dictates moves 3, 5, and 7. In the world of fraud detection, the board is constantly shifting from the days of faxes to the era of agentic AIs. The tool has changed, but the stakes remain the same. I'm your host, Matt, and today we're joined by 26-year fraud veteran Steve Lenderman. We're diving deep into the evolution of fraud tech, why the bad guys are getting faster, and how we can finally get ahead of the move. We're talking synthetic data, real-time monitoring, and why your data might be your biggest Achilles heel. Let's get into it. Steve, welcome to the Lead in Detection podcast. Thank you for joining us in this, what is the holiday season, as we can see.
Yeah, that's my version of my a virtual background. I go the extra mile and put up some ugly decorations. So I'm happy to be here.
All part of the spirit, all part of the spirit. Yeah, you've been part of this scene for quite some time, so there's a lot of knowledge to tap into, a lot of war stories that we hopefully get some interesting points from, and we're going to focus today on technology. That is what the Lead in Detection podcast is for. So technology in fraud detection and the evolution of the tools that we're using to fight fraud. So yeah, give us a little bit of background on why we want to talk about this today and why is it important?
Sure. Just a quick background about myself and how we get into this conversation today. I've been in the fraud space for just over 26 years. Tell by my gray hair, obviously, that been there and earned every one of them. Started my career in the late 90s when we were still using microfiche and faxing things. The word technology was not really all that there, right? Email was just being used, et cetera. And here we are 26 years later talking about AI, agentic AI and AI agents, where everything is digital, right? So, and talking about real-time detection and, the days of the old Falcon scoring, right? It's incredible how fast this has moved. And, it's exponentially grown, right? In scale and usability, right? Using technology, even 10 years ago, you had to really understand technology, understand how to code, things of that nature. Now, through the course of, the AI and LLMs, deploying technology is literally much easier, right, for the end user. And it's really become quite dynamic and functional, right? You can really customize it to, your use cases, right? In the past, fraud prevention technology was pretty much built for a use case, and you had to kind of pigeonhole it into where you needed it. And that always didn't work. So obviously technology didn't solve some of those problems. So here we are today with technology that's quite diverse, adaptable, dynamic, and most importantly, can be deployed relatively quickly, instead of the old on-prem type stuff into a SaaS cloud-based environment. Makes things much easier for people.
Yeah, and of course, with evolution of technology has come kind of the evolution with fraud as well. So going along the timeline from when you first entered the game, what have you seen the most dramatic, or what have the steps been on the fraud side?
Yeah. It's everybody talks about AI impacting both sides of the game, right? Prevention and the practitioners, the bad guys doing the stuff, right? And clearly, technology, AI has enabled bad actors to do things, at scale now, right? Much more efficient as well. But the fraud itself was relatively the same itself, right? The account takeovers are still account takeovers. We still have new account fraud, identity theft, and synthetic identity, and all these fraud types are relatively the same. I think technology hasn't really created any new fraud types, right? What it has created is the ability to do it faster, easier, and lower the bar of entry, which is kind of the scary part, right? If we go flashback 10 years or so ago, it was kind of fraud as a service type thought process where somebody was the credential stealer, and then someone would then sell the credentials, and someone would buy the credentials, do the account takeover, and someone would then commit the fraud, then someone else would launder the funds, right? And then we have the mules. They kind of just pass off, almost like consulting services. Now what you've seen is that threat actor can do all of that because they don't have to rely on other people because technology has helped them. Well, how do I get mules? Okay. The fraud LLMs will do that for you. How do I create more dramatic, more impactful phishing emails, right? These are things that all dramatically improved through technology for for the bad guys for sure. And that's really forced the fraud prevention professionals and technology to keep up, right?
Mm.
Um, the most important difference I think we see between the good guys and the bad guys, I think the ability to leverage technology is about the same from a capacity perspective, right? Uh, as big as the fraud enterprises are,
Yeah.
the resources of the big banks, the big tier one banks, I mean, they have a lot of smart people, a lot of money to get technology. I think probably more than the bad guys do, right?
Mhm.
But where the bad guys' massive advantage is they're not regulated, right? They can do whatever they want, when they want, how they want it, with no consequences, right?
Mhm.
And that essentially is our Achilles heel in the fraud prevention space, is that we don't have that liberty to do that, right? And so I feel like the good guys are playing checkers, right? And the bad guys are playing chess, right? And
Mhm.
that's where the game is different from a technology perspective.
But chess is theoretically, chess is a more difficult uh, game. Is that the case? Is it more difficult for them to get moving and actually make an impact? The bar to entry is lowered, right? It's easier to get into, but to actually master it, is it much more of a skill from the bad actor side?
Yeah, that's a good point, right? And so I think I have more is that the bad guys are, chess is more thought process. They're three, four,
Mm.
five moves in advance.
Yeah.
I think that's where they're doing a little better than we are, right? So we're
Mhm.
always in a reactive stance. The guy is always reacting to what the fraud is, right? It would be ideal, right, if we could predict what the next fraud was going to be, when it was going to happen, how it's going
Mm.
to happen, and who it's going to affect, right? Nearly impossible to do. At this point, I mean, maybe in 5 years with AI and LLMs and all the fun stuff that's going on, who knows, right? But for now, they control, right? They have the first move, right? And that
Yeah.
first move always dictates move 3, 5, 7, right? And so we respond, they do boom, boom, right? We respond, they move 2 more steps again, right? And that's kind of I was kind of getting the analogy. But that's a great point, right? Chess is definitely much more difficult than checkers.
Yeah.
But the bad guys again have gotten good at it, right? And that's all they do, right? That's all they do all day, 24 day, 20 hours a day.
Mm. And so it sounds like agility is like a big point that technology's enabled them to pivot very quickly, get shut
Yeah,
down, shut down, pivot again. But that can be
yeah.
happening. Are you seeing that happen thousands of times a day now compared to how it was previously?
Yeah, so some of the attacks we used to, see that were, traditional account takeovers, right? Where, call in, they have social engineer the call center, right, which is very manual, one person
Mhm.
doing one thing at a time, right? And then you would see the phishing emails that would be blasted out everywhere, getting more spear phishing, and now they're getting into, they call it whaling and fun things, but all that. So the response to that was relatively simple to do, right? But the agility part that we're seeing now is the technology on the bad actor side, the LLMs, um, on the verge of some agentic type stuff, right? Where it's adapting in real time. It's sending out, let's say credential stuffing, right? And then it's understanding, okay, why it's not working. Okay, understanding that this credential is tied to a particular time zone,
Mhm.
right? And now it will launch that credential stuffing attack in that time zone, right? In the past, we would just see, well, here's 30,000 logins, regardless across the globe where they're from. Let's all throw them against this domain to see if they work. And you
Mm.
can see that traffic pretty easily, right? So now we're also seeing credential stuffing, not just getting the appropriate time zones, right? But also spreading that attack out over the course of time to blend in with real traffic, right?
Mhm.
Technology has made that much more agile for them, right? To blend in with the good stuff. And that's just kind of one example there, right? And we're starting to see a lot of institutions using chat bots, right, for customer service,
Yeah.
which is, helpful, obviously. Very few people want to talk to people anymore as from a customer service perspective.
Yeah.
But the bad guys, again, they're using their version of their bots, right, their chat bot as well, to essentially map out the chatbot process, right? What chatbots can and can't do, what are the limitations, what are its controls. And as that chatbot may adjust, the bad guy's chatbot, right, is also making the same adjustments, right? So it is a checkers and chess game, right, to see who wins that battle. And the agility is just there, right? They can do what they want to do, when they want to do, how they want to do it. For me to put like, if I see a scenario, for me to put a rule in isn't so difficult to do, but I also have to test it, right? I can't just deploy it to my entire environment and then impact a large portion of customers negatively, right? So I like to make sure we're doing that from a customer perspective, but I also have to run it through legal, again, make sure we're not doing anything discriminatory. None of that the bad guys have to worry about, right? So again, they're much more agile and nimble than we ever will be. I mean, unless we go to be bad guys. I think it's going to happen either.
Well, the famous catch me if you can. The only way we can get inside the criminal mind is to start hiring them, right?
Yeah,
So,
yeah, yeah. Yeah,
so
I
we're
mean, there's
talking
something
about.
to be said there about about folks who, I think some of the best fraud practitioners out there, fraud prevention practitioners,
Mm,
um, in the back of their brains, and I'll throw myself in there too. You kind of have to think like a bad guy. You
yeah,
really do to understand. I've always said to catch fraud, you have to understand it, right? And that takes just experience, education, attending podcasts, or just anything you can do to figure out what's going on. So I think one thing to do is look at a fraud and tip your hat to them. And sometimes they beat you, right? You have to just understand that they did something you couldn't figure out. And so you need to do
mm,
kind of a fraud autopsy, right? Go in there, look at it, understand how they did it, then build your control from that perspective, right? So sometimes it's really important just to think like a bad guy as best as possible without being a bad guy.
yeah.
That's the ethics and moral question there.
Because the triangle of fraud, right? It's the reason, the opportunity, and what's the third one?
Rationalization, opportunity. I don't know if it's going to be a quiz today.
I know. I'm testing
as a
myself there.
as a CFE, I should know this off the top of my head, but you're getting me on an early morning here. But yeah, the triangle certainly plays into impact, right? As how we build some of our
Mhm.
controls around. I think what concerns us from a fraud prevention perspective now in that triangle is we're seeing a lot of first party fraud, right? Where it's
Mm,
very difficult to, understand why a good customer goes bad, right?
yeah.
Was the intent from the get go to be a bad customer? They come in as a good customer. In the first 30 days, they do something that is a bad act, right? Commit fraud. Or is it a long term customer, for 10 years and all of a sudden they commit a fraud, right?
Mhm.
I think technology helps in both those scenarios, right? To think about as you onboard a customer, right? Looking at, it's difficult to have a data field on them pretty deep because they're a new customer, right? But new customers certainly behave differently than tenured customers.
Mm,
There's a pattern there as well, right? If you're doing something and going to intend to do something, you may look at logging in more often than usual, looking at transaction amounts, moving money in and out faster, et cetera, right? And then you have a long-term customer who is going to do something that you normally wouldn't think, right? There are also changes in that behavior as well, right? And I think that's our technology can really look and really help us in a first party fraud scenario understand things that we wouldn't see, right?
mm,
Because all too often we're still in a very reactive situation with the best technology that the banks and insurance companies and telcos have.
mm,
It is still reactive. It is customer
yeah.
does this, we do that, right? We need to get to the point where, okay, we think customer is going to do something. How are we going to react that as it happens, right? Not after it happens. So technology will certainly help us in that space.
So that's kind of we talk about going from checkers to chess and upping our ability, our skills in the game, going from rules to machine learning. So I mean, rule based within technology has been very excellent at stopping what we already know, but the speed of change, new fraud tactics are happening every day. So is this what we talk about, going from a full switch from rules to machine learning models?
Yeah, I think it depends on your location globally. Every region has different set of rules and regulations or privacy standards. And as great as technology and quote unquote AI is, right? It is still uh, you know, a new technology, and certain regional areas have different controls around it, right? If you look into Australia, you look at the EMEA, here in the States, right? Regulation is kind of being deregulated a little bit in that space, right? And so I think there's a lot of uncomfortableness still around what we can do with it. No one is really quite ready to take the full jump away from what we've been doing for the last 2 decades. I think where AI will help us is actually getting those rules a little better, right? The ability to do things in some sandboxes, the ability to actually, one of the best case scenarios that I was telling even here at iSolve, right? We were seeing some account takeover scenarios, and as a fraud practitioner, right, in order to build the rules, right, to stop the
Mm.
fraud, you kind of have to have some fraud, right?
Yeah.
You kind of have to let's let the bad guy in, but in order to stop them, you got to know what they're doing. But no one
Yeah.
wants to catch 22. You don't want to allow fraud to happen, so you can go try to stop more of it.
Mm.
So one of the great things that we're using and others are using as well, is, okay, here's a small set of what the fraud looked like. Put it into an LLM and then create essentially a large set of fraud data that's synthetic, right? And then we use that to train our rules and models around that synthetic data, right? We don't have to wait to get 1,000 fraud attempts to build the rules, because it's, I can't go to our governance folks and say, I want to do this rule. Well, what's the results? Well, I only have 10 frauds. I really can't tell you what it's going to do, right? Now, if I can go and build out 10,000 synthetic fraud scenarios, run the rules on there, provide those results, I at least can do something. And now I more than likely get the approval to proceed with those rule changes in that perspective. Well, I don't think it's going to we're going to get off the static rule scenario in the very near future. I think AI and technology will help us be more effective with those tools, right? Be able to actually tune them almost real time as well, right? As we're providing truth data, the rule fires, false positive, true positive, whatever it might be. Truth data goes back into the system. AI looks at it and says, okay, let's adjust this rule, right? Let's adjust this alert based on the feedback from the truth data that we're getting. I think it's huge.
So is that kind of hybrid models, if you like?
Yeah, I think hybrid's a good way to put it.
Yeah.
And as I said, I think banks are still, not just banks, any industry, right? We are deploying, there's governance concerns, right? I think it will take a while for privacy, legal, and even auditors and regulators to get comfortable with the capacity and capabilities of what AI can do, right? And technology can do. And an example is in money laundering, right? There are a few very big legacy players in the AML space, right? We'll leave their names of it. If you know who they are, you know who they are, right? Yeah. But they stay in place despite the fact there are better products out there that are better technology, that are using AI, et cetera. But I've sat in several panel sessions and peer groups with those AML leaders, and they basically say, I'm not moving this product because the government is very comfortable when they come in and audit. They know how to run the reports, where to get them, what the data looks like, and they do not want to rock the cradle, right? They do not want to have an auditor come in, a regulator come in and start looking and asking questions because they're uncomfortable. Right? And so they will keep a legacy tool there to keep the regulator happy. Like, is that good or bad? I don't know. But that's kind of where we're at in the ML space for sure.
It makes commercial sense, right? Compliance and regulation is your biggest driver, and you're just doing it as not necessarily to be best in class, just to tick the box. Why would you not use that player?
Yeah. Why take the risk, right? That's in the ML space, right? It's a little different world than the fraud space, right? You are looking after the fact. It is, it is more of a regulatory, reputational damage issue, where on the fraud side, right? Obviously, there's reputation regulatory concerns there too, but there's operational loss, right? That's the biggest difference, right? So fraud can be and wants to be a lot more nimble, a lot more proactive versus reactive, right? We almost don't want to chase the money, right? In the ML space, you are essentially chasing the money, right? Following the money to prove the money laundering. We as fraud practitioners, don't want that. That's a quick way to unemployment.
Yeah. I mean, fraud's a bit more Wild West compared to AML, right? Like you mentioned, and we can be a little bit more not playful, but a bit more exploratory. With what we're working on, and you mentioned about need for speed and real-time transaction models. So how have you seen the evolution and the adoption of kind of real-time in fraud detection?
Yeah, I think the financial sector, we're talking, financial transactions, whether they're ACH or check or debit, credit, right? Or even peer-to-peer, right? Real time has been around for a while, right? When I first started back in the mid 90s, right? Real time was within the same day. Like, okay, we saw this thing and we would reach out to the customer and we determine if it's fraud, yes or no, right? And now we're looking at decisions being made in nanoseconds, milliseconds, right? The tools are there for the customer to really engage as well, which is even more impressive. But you just get outside of the banking space and you're looking into other sectors. Real time is probably back like it was in the 2000s for banks, right? It's a journey for them. The insurance space, in particular, whether they realize it or not, insurance space is essentially a bank, right? They receive payments, they send payments, and they hold money. They just sell insurance, right? And so they're starting to see a lot of traditional bank fraud now take place in insurance space, right? The days of the old fake slip and falls or car accidents and back injuries still happen, right? But you don't need real-time monitoring for that, right? That's all just a straight activity. Right. But when you're sending out, unfortunately, again, we'll make fun of the United States here. You're sending out thousands of paper checks still in 2026, and you're still moving a lot of money through ACH, right? How do you how do you do real-time transaction monitoring on those, right? That's tough for them. And so I think that what we have going on here is, the banks have embraced it pretty quickly. It is very much real time. Technology has got them to that point, but real time is still reactive, right? It's still something taking place. A transaction occurs. How fast can it respond? It went from like this to this, but it's still reactive, right?
Yeah.
It's got to be somehow in front of that, right? And that's the tricky point, right? Where a bank can be predictive, right? It's almost you probably travel a lot. I travel a fair about too, right? And a particular bank that I use, and I use them quite often for my transactions. They have the information to know where I'm doing, where I'm going, and how I'm getting there, right? And so I don't even have to call anymore to place travel alerts like that was what we used to do. Like,
Yeah.
this company knows I booked this flight here, and I know I'm landing here, right? They know the hotel that I've booked, so it's not unusual for me to order an Uber or Lyft that they cost X amount of dollars. If it was globally, they've tied that all. So there is some predictiveness in there, right?
Mhm.
They know not to, flag any of this, right? Like I would laugh when we used to have rent cars and travel, and then you would go to use a fuel pump, right, to get gasoline or petrol, whatever we will call it. And since it was in a different state or different country, it would get flagged as fraud right away because that was traditionally a fraud transaction until you tested the card to see if it worked, right? We actually used the old cash card. Now it makes sense. Hey, you rented a car. You're on your third day of your rental. You're heading back to the airport. You're putting fuel in the vehicle. That's a valid transaction. Right? That's predictive. Like that's what technology has helped them, and a little bit of the AI has helped them get to that point.
Isn't it just a data problem then? Is it getting hold of all the data to make these, we'll turn it from reactive into prediction and
Yeah.
pulling data from different sources that we probably wouldn't have done within a business previously?
Yeah, it's always about data, right? Whether it's a fraud problem, a money laundering problem, whether it's marketing, whether it's customer retention, it's cliche term. It's all about the data, right? And a lot of companies, when they go to deploy technology, their data is not ready, right? Either it's the data pool they have is not prepared accordingly, right? It's kind of dirty and messy and sloppy, or as you mentioned, it's desperate. It's over here, it's over here, it's over here, it's over there, and that is all different formats and different functions and
Yeah.
structures, et cetera. And so, I spent about a year or so with a solution provider I call the dark side, right? And when we talked to large tier ones, it was always, well, we're ready to do this, and they would get these technology, and then they would realize 2 years later that it didn't work. And no, they would like to blame the technology, and it wasn't the technology, right? It's bad data in, bad data out. Bad data in is bad results out, right? And so it was really important, when we talk to those organizations, the first thing to do is let's get your data figured out, right? That's the most important thing. No matter what happens, no provider is going to help you until you get this squared away, right? And so the trick now, I think, from a solution perspective, from a technology perspective, is who can clean up your data faster and get it into their product to provide that proof of concept, that MVP, to show them that your product works, right? Technology will dramatically help the provider get that down, right, from was weeks or months to now days, right? I kind of always call it like data tennis. When we would do a POC with a provider, send us data, we send it to them. No, we need it in this format. We send it back, we reformat. No, we need this in that format, right? Like back and forth, back and forth.
Yeah.
Imagine just taking all of your data that you want to use for the sample and just go here, provider, and they are able to do all the resolution of it, right? To cleanse it, and then get it back to you in days, right? Instead of taking weeks to change it back and forth, like, and it takes the work off of me, right? Like
Yeah.
as the practitioner, I don't want to spend hours on my data science team cleaning data for you to make your tool work, right? You should do that to make your tool work.
Yeah.
So
And all the different tools have it slightly differently, so not going to change it every time, are you, on the provider to do it? Do you think it's a bigger issue now as well because data's coming in from all different areas when we're talking about fraud? So it's not just internal, you got third party, telco, data's getting involved, device.
Yeah.
How are we going to clean up all of this coming into decision making?
yeah, so there's a couple of different angles to kind of look at this one. So if we're looking within an organization, this is concepts of quote unquote fusion centers that are out there, right? And a fusion center essentially is just, access to all the data within your organization, right? And typically, most fusion centers kind of follow the law enforcement model of a fusion center, which is let's get people from different agencies, put them all together in a room, and they all each representative has access to that agency's data, but the data itself isn't really shared, right? It is not deconflicted. It's hey, I need information on this, or you have this, and you go to that person over there and they look it up, right? Yes or no, right? That's the old school kind of fusion center. A lot of organizations still run fusion centers that way. They put an AML person there who has access to the AML technology, right? And the AML database. And they put a fraud person who's got their fraud stuff. And they put a cyber person who's got the fraud cyber stuff. But none of that is connected still, right? And that's where I think technology really has the ability to actually push the data together. So you see the 360 view of the customer's entire journey, right? From onboarding to offboarding, from a cyber perspective, from when they first came to your digital door, to when they logged in last to make a transaction, right? Typically, none of those people work together, right? And so it doesn't work until you can get that data joined at the organizational level. Now, externally, right, it's the concept of consortium data, right? That's out there, right? How do we have all these banks, organizations have all this data on bad people doing bad things? But it's very difficult, if not impossible, to share that, regionally, industry wise, and God forbid, globally, right? Like, because, I mean, we all know bad actors only commit one kind of fraud against one type of target in one place in the world, right? They have no rules. Remember, they're global, right? So they can move right around the world and against industries and targets because they're isolated from being caught because the connectivity is not there, right? People committing telco fraud are same people committing insurance fraud, same people committing government fraud, and none of the industries are connected, have no idea what's happening, right? And that's an advantage they always have. How do we solve that? That's not the $1 million question. That's the $1 billion question. Is how do you solve that?
Is it a people problem, or is it a technology? In theory, can technology do it? It's just the breaking down of
So I'm just a fraud guy, so not that smart. But I would think technology's there, right? If we're sharing, data for other purposes, marketing data, right? Let's Google, Amazon, Apple, like, they're all sharing data at global scales and more than we would ever imagine. Is it a people problem? I think it's a people problem because people put the rules into play. It's always, well, we can't do that, and the question should be why can't we? Like, why we should be doing this, right? It's not necessarily a people resource problem. It's a people's mindset problem, in my opinion, that are keeping this here. And it's privacy constraints. Let's be honest. Ultimately, it's my data. It's mine. Like, I don't want to share my toys. Right? It's mine. And everybody, unfortunately, wants to profit off of it. Right? Share their data. Everybody wants to get paid. That makes it challenging as well, right? How that model works, I don't know. I think different countries have done some pretty good stuff with it here and there. Others are decades away, if at all.
Data is the new oil. It's worth some money. If it's oil, then everyone wants to keep hold of it. When we're talking internally, though, you've probably had some frustrations yourself, being sat in a fraud team, and AML aren't sharing what they know, and cyber fraud aren't sharing what they know. How have you got around that in your experiences?
Yeah, technology is fantastic, right? But again, behind technology are people, right? And so one of the most important things I learned 15 so years ago when I was at PayPal was to go talk to those people, right? Build a relationship with them personally, professionally, understand what their roles are, explain to them what our roles were, build that mutual respect amongst teams, which opened up collaboration and communication, right? And so we would do side-by-sides or one-on-ones with their people. They would come with our people. And we started to build that relationship that we essentially became, collaborative departments, right? So we did that with AML, we did it with marketing, we did it with cyber, we did it with our data science teams. We went anywhere and everywhere because fraud touches everywhere and anywhere, right? And it's really important to do that. And a quick example is I went to our marketing team, a different organization, but we were deploying, looking at what we thought was a credential stuffing attack. Like, oh my God, our cyber team was freaking out. Like, what's going on? I'm thinking it's credential stuffing, or it's an account takeover, or a bin attack. Like, oh my God, right? So we dig into it, and then we reach out to the marketing department, like, hey, are you doing any campaigns right now? Like, oh yeah, we launched a Taylor Swift concert ticket contest. So the more you can log in unlimited times, every time you log in, you get a chance for tickets. You think that would have driven the volume up just a bit? if we had known that in advance, right? And I don't blame marketing for it, right? It's a two-way street communication.
Yeah.
So now we knew when they were going to do campaigns and things of that nature. We could prepare accordingly for that, right? They
Mm.
had no one, they didn't understand what we were doing, and I just explained to them, listen, that contest is great, but we just went through like $800,000 in funds trying to do all these device identifications and blocking credentials when it was all legitimate, right? So
Mm.
it's a great example of, again, how working with somebody outside of your realm could have
Yeah.
huge impacts on your fraud space.
What about the other way? Where have you got in most trouble or most friction caused between marketing or other departments sitting in fraud?
Yeah, I mean, the most friction I've ever I've actually probably gotten into is, surprise, surprise, with legal. As fraud practitioners, we look at things in the case of synthetic identity, for example, right? These are
Mm.
fictitious individuals. From a data perspective, they don't exist, right? And we see a lot of it looks like first party fraud or this or
Mm.
that, and we want to close the accounts down, right? We want to close them down, and depending on, again, your geographic region, there's ways you can do that, right? And here in the States, particularly, we had to have calls, right? And we would say, "Hey, this is synthetic," and our legal team would go, "Well, they can sue us for closing the account down as discrimination, for example, right? Or
Mm.
without just cause." And I'm going, "They're not real people. Like, there's no one behind us suing us, right? Like, there's not there, right?" So we would have this kind of constant battle back and forth,
Yeah.
which then we solved by working with legal team, explaining to them what they were doing, how they were doing it,
Mm.
what it looked like, the risk that it looked like, the operational costs it was involving us to do, right? And of course they agreed, and then finally we started closing down on these accounts, and then of course they started sending in fake legal notices, right? And then the attorneys got all upset again, and I said, listen, like, these are fake documents. Like, these aren't real things. This is the game that we're going to play back and forth.
Yeah.
And so that was when we got probably the most amount of trouble. Is I kept pushing and pushing and pushing, and until, again, we built that trust and relationship, that then we started making progress. But that did take a little bit of time.
No fire without friction, right? So
Yeah, yeah, can't keep the legal team happy.
yeah,
That's for sure.
you want to be keeping them on side for sure. And the kind of the future of it. So we're talking about synthetic data there. That's a huge problem moving forward, right? What are your kind of predictions for how much of an impact synthetic data will have on the fraud space?
Yeah, actually, very interesting. The ACFE just posted their 2025 top fraud trends, et cetera, and synthetic
Mhm.
identity, synthetic fraud itself was the number one trend that they were seeing in 2025. And will continue into 2026. Being in the synthetic space for the last 20 or so years, I of
Yeah,
course immediately jumped on my soapbox and just said, listen, this is not a new problem. Like, it's been around. It's only
yeah,
gotten worse because, again, AI is a data tool, and
yeah,
synthetics, whether they're individual synthetics or business synthetics entities, are just pieces of data. So
yeah, yeah,
you have a tool that makes better data, it's going to make better synthetic identity stuff as well, right? And so I think we're going to see, and we have seen globally, synthetic identity expand, into all the markets right there, right? Is forever and ever, everybody thought, well, it's just a United States problem. No, it is not. It is absolutely, and it is a global problem. It is in
mm,
every continent. Whether it's awareness or prevention is, I think, the biggest problem we see globally. I think the next phase of synthetics are already starting to take place in this concept of synthetic businesses and entities, right? Where commercial fraud is more
mhm,
profitable for bad actors, right? You can do consumer fraud and maybe get a $10,000 or $5,000 credit line, do some things. When you open a business account, right, it's 10 times of the value, essentially, right? And
yeah,
let's be brutally honest. Banks don't perceive businesses as seen fraud controls as they do with consumers. And so
mm,
it's an opportunity for bad guys to, more exposure, less friction, and there's really a lot less data around it. Even though there's lots of businesses, Dun& Bradstreet, Moody's, and a few others have some pretty good
yeah,
data sources. Here in the United States, there are 500,000 new businesses created every month, right? And most of those businesses, yeah, that's a legitimate stat, right? But most of those businesses are, I call micro businesses, right? There are one or two
mm,
people running Etsy shops, kiosks in the malls, right? They're not regional large organizations employing 200 people, right? So how do you find the data on somebody who's running an Etsy shop, right? Or doing, consulting, or one person consulting, right? That's a different environment, right? And so that is a ripe opportunity uh, for, I think, synthetic entities to really explode going forward, right? And then using the synthetic identity as the owner of a synthetic entity business. And now the whole thing is just like synthetic. right? And then the employees could be synthetic, right? And the other business they're transacting with, invoices and loan, are all synthetic, right? You can
Mhm.
see like, oh God, this could spiral really, really quickly.
Yeah.
And it scares the what out of me, to put it brutally
Yeah.
honest.
But it looks it's so hard to distinguish, right, between
Yeah,
synthetic and real. And
yeah,
so
yeah.
how are we fighting back? What kind of steps are we
Yeah,
taking?
we're fighting back with data, right? We're
Yeah.
fighting back with data. That's the only way to do it, right? Creating these businesses, for example, they are going about the business creation, legally, right? They are going to, the different organizations creating the entity, right? It's just, again, it's the intent that's there, right? That we're seeing. And
Mhm.
so, you're looking at, again, some consortium type data, length of business in play, looking at the relationship with the owner, right? We did some research at a large organization I was with, that was a non-credit reporting agency, to put it nicely, but we did a lot of commercial stuff. And so
Mhm.
we looked at that, like, essentially the risk of the owner, and there was like a 97% correlation to the risk of the owner to the risk of the business. So the business owner was not good, the business was probably not good as well, right? So we creatively were able to figure out how to partner that risk together and then obviously employ that within the commercial lending space for that perspective. But that was a data decision, right? We didn't look at them from just a commercial data. We looked at them from a private consumer, commercial, blended data together to get I call it a risk GPA score, your overall risk profile.
Yeah.
Um, that was really, really important. And then I think we need to start looking at, because there's so much data out there that we are so focused on quote unquote the traditional data, right? A name, a government ID number, an address, and email. Okay, great. There's things that are out there besides us, non-traditional data. Like, what do we look like from a social media perspective, right? What do
Yeah.
we look like from a digital footprint perspective, right? Has an email address been around for X amount of time? How often is it used to log in, right? So I managed 3 synthetic identities, and I've had email addresses for all these identities for 15, 20 years, right? The question is, okay, yes, the email is going to validate it's been around for a long time. Fantastic. But if I haven't used it in 10 years, right,
Mm.
that should be a sign there's probably something not knowing. Like, how often do you log in your email? Like every 30 seconds, probably, right? You're always in your email.
Yeah. Yeah.
Well, synthetic identities don't log in their email all the time. So, using technology, again, remember, I'm just a fraud guy. I used an LLM to build a bot for me that logs
Mm.
my synthetic identities into the emails and just sends emails to other places. So the email traffic looks like legitimate traffic of a real person, right? That's
Mm.
again how a bad guy can use technology to do something to get by our non-traditional data checks. So I think that's really important. We have to pivot from the traditional stuff, some non-traditional stuff, and get creative on how we look at things from a risk perspective.
With all this data, so the cost of entry for the fraudsters is getting lower. The cost of fighting back is getting more because
Yep.
the amount of data, the tools, the headcount. Is it getting too much? Is that gap just going to be getting to a tipping point soon where it's just going to become part of business? You have to take the loss because it's just so expensive to keep a cap on it.
Yeah, I think we're seeing two things take place in the industry. First of all, you're right. You're right. There is an acceptable cost of fraud, right? We can't
Mhm.
stop it all. It's going to happen, right? And so, onboarding a fraud account, while not ideal, um, most organizations will say it's not going to be painful until there's some type of money movement, right? So
Mhm.
we can onboard the account, and until there's money movement, it's not necessarily a large risk, right? The money movement becomes the risk, hence they want to do that. So yes, there is a balancing act. The second part of this is, there was this concept, and it's changed dramatically in the last 5 to 10 years, right? About progressive risk, progressive onboarding, right? Where banks typically would do just everything at the front at the gate, right? And it would be $10 or $8 to onboard a customer, right? And the customer wouldn't be profitable for 2 years, and there's always a balancing act there. And so now what we're seeing is, okay, we're going to deploy our cheapest, most economical, excuse me, tool at the gate. If they pass that, okay, next. And as they get further in the onboarding journey, and as the risk increase or decreases, right, you apply the
Mhm.
appropriate friction. I kind of giggle. And again, if you use this, I'm not making fun of you necessarily, right? This
Yeah.
whole concept of selfie and liveness checks cracks me up, because if you're at the point where you're asking someone to do a selfie check, have you not already crossed your risk threshold? Like, at some point you go, is
Mhm.
this customer really worth the onboarding? Like, in my opinion, I'm like, we eliminated selfie checks just because I'm like, I don't want to do business with that person needs to do that. Just too much there. Like, go somewhere
Yeah.
else. That's fine. If you want to do it, go ahead. And it's not scaring bad guys away. That's the other problem, right? So they're like, okay,
No.
we'll do that. We'll play your game. Checkmate, right? Here we go.
Yeah.
Using deep fakes, right? And they do that, right? So I think there's this concept of progressive risk of the onboarding.
Mm.
And then maybe a last little caveat around this, when I think we're seeing um, this concept of kind of almost perpetual monitoring, perpetual KYC going on, where again, it was like onboard them and they're good to go until they do something stupid, right? Then it's a reactive.
Mm.
If you start to look at them in a regular cadence through some different data, you may start to see some behavioral differences there. For example, looking at like login attempts, inbound queries to the chatbot on what my credit limits are, how much I can move in one day, how much I can take out of
Yeah.
them. Those would all indicate like particular stressors, right?
Mm.
Looking at it, if you have a direct deposit account, right? And for the last, 6 years, Matt was always getting paid a chunk of change on this day. And now for the last 3 months, that chunk of change isn't there anymore. Like, okay, maybe Matt's unemployed. Okay, so what? Okay, that changes your risk profile dramatically, right?
Yeah.
Now all of a sudden, Matt's got to feed his kids and pay his auto payments and pay his bills. And now Matt may do things he would not normally have done, right? And now Matt may be
Mm.
committing first party fraud because he's being essentially forced to and rationalizes it in the fraud triangle, back
Yep.
to that, right? To commit things he would not have done. But if
Mm.
you were looking at the data, you might have seen, okay, Matt's being stressed, right? Matt may do something he may not normally do. There's gambling charges, there's whatever it might be, right? So that's the things I think people are getting to are, okay, trying to get predictive, looking at data, looking at progressive and perpetual monitoring of the customers
Mm.
to really try to get in front of things.
It's a building scope, right? So many different areas to cover, and we could probably carry on. But I can't let you leave without kind of your predictions for next year. Do you think we're going to be okay next year, or do you think it's going to be a bit of a hard hit?
I think we're always okay, right? I laugh in these 2026 predictions that everybody wants to put them out right now, and they pretty much all say the same thing, right? I kind of laugh. People think fraud's going to increase. Fraud's increased every year for the last 20 plus years.
Mm.
It's never going to go down. Like, and every year we seem to survive, right? I don't think it's necessarily we should accept that, right? It doesn't mean it's
Mm.
okay, but it's just going to happen, right? So we have to accept that, and we have to be able to figure out how we manage that, to put it nicely, right? And so um, I think the fraud increases and it's moving laterally as well, right? It's getting into different markets, it's doing different things. Um,
Mm.
I think that's all right. I think the biggest concern we honestly have is that it's shifted, and it's been shifted for a while now, from the proverbial kid in the hoodie, right? That we always see that cyber criminal concept. Like,
Yeah, yeah.
that's nonsense, right? There's
Okay.
no one person committing fraud, right? This is transnational organized rings, and it's also driven by nation state actors, right?
Mm.
This is now a complex global problem, right? And it has ties to, politics, obviously, government, has ties to our social media, our data. That's our biggest, I think our biggest problem right now, I really fear, is that fraud hits us everywhere now. It's not going to stop, and it's too easy. And my final thing is always tell people, like, you are the best protector of you. Like,
Yeah.
mind your own business, mind your own data. You know, do what you need to do to protect yourself. Don't just rely on organizations to do that for you.
Hmm.
Because let's be brutally honest, organizations are protecting themselves.
Yep.
Only protecting you because regulatory they have to, right?
Mm.
If they didn't have to, they wouldn't. So just take care of yourself.
Well, it's been an absolute pleasure, Steve. Thank you for joining us. If people want to keep up with your work or any events, speaking, conferences you got coming up, where can they go?
Yeah. So LinkedIn's probably the best spot to find me. Pretty easy to get there. I tend to jump on a line a little bit here and there, as you could probably tell. So love to have everybody connect if they're interested. We'll be back on the road probably mid-January, February, with a few conferences here and there. You can also visit, it's shameless plug, but it's stevelenderman.com. My speaking engagements are there. And we're looking forward to 2026 and wrapping up 2025 with some holidays coming up here, but as
Yeah.
fraud fighters, we don't get to take days off, right? But
No.
hopefully the bad guys take some vacation. That usually happens in the spring. They all go on vacation in the spring.
Oh, is that
We
true?
do
Is that
see
true?
we actually do see a decrease depending on which group is doing the fraud, right? If it's
Oh, right.
our friends in Eastern Bloc, we typically see it in March. They love to go to the Med for a couple weeks and go on vacation. A holiday, excuse me.
Nice.
If it's the stuff in China never stops. They don't go on breaks. They are
No, no,
relentless.
996. Hopefully we'll be spring breaking next year. But it's been an absolute pleasure. Until next time, Steve, and to listeners, bye for now.
Stay right. Thanks, Matt. Have a good day, guys.